Let's welcome on board Mr. Rohan Agarwal, the partner at RETC. It's a very interesting note and a report that they've come out with in terms of the IPO pipeline for 2026 and how the primary market in the country as well as globally is shaping up. Mr. Agarwal, hi, good to be chatting with you. Thanks for your time. How would you describe the current state of India's IPO market if you had to sum it up in one or two sentences? Because the report indeed paints a very optimistic picture of India's IPO landscape. So what, in your view, is the single biggest structural change driving this transformation? Mr. Agarwal, you'll have to unmute yourself, please.
Sorry.
No
As a
worries.
market, India has grown, the IPO proceeds from India have grown structurally about eightfold in the last decade, being one of the very few markets to have achieved that feat. And ahead as well, we see a very healthy pipeline, which we love to share more details over the course of this conversation. Essentially, what's driven this growth is deepening of the pipeline of the companies which are mature enough and ready to hit the public markets, sustained corporate earnings, and very strong macros from an India standpoint in the global landscape.
Okay. And, just talking about this report a little bit more, the report highlights a structural shift towards profitability over growth. Do you believe this is a permanent reset for India's IPO market, or could investor preferences swing back towards just high growth as liquidity improves? Because these days we are watching a lot of people give more importance to if the company is profitable at the time of IPO when they're thinking of whether to subscribe or not.
So our point of view was particularly targeted at new age companies when we were talking about the FY22 cohort, when there is a lot of prioritization towards growth. Whereas when we speak about the more recent times, there is a balanced view on both growth as well as profitability. And we do believe the new age companies with disruptive models and businesses that are coming out for the first time, they do need a lot more time to be able to really just let the entire story play out. And we see that in the cases of companies which have already gone public in terms of the performances that they had at the time of listing versus today, there's a number of them which are really just growing at a much faster pace in terms of earnings compared to, say, the overall market itself. So like we are seeing in the global markets where we are seeing the AI theme playing out, of course, over there, the profitability itself is right now, it's expected to be playing out in the future a lot more. So as India market also sees some such themes, potentially we will see a reversal. But as of now, we believe it's still about sustainable growth.
It's all about sustainable growth still. Mr. Agarwal, the report projects new age companies. Since we're talking about that, the projection is for them to reach around a 1 trillion market cap by 2030. Which sectors or businesses do you expect to contribute the most to this kind of value creation? And in fact, in your bull case too, you've mentioned a $1.4 trillion number by 2030. What catalysts could be at play to make the new age companies reach such a big metric?
So far in just last 5 years alone, we've had 50 plus new age companies go public, and today their market cap is sitting at about $150 billion. That's roughly about 4.6% of the overall market cap of the country today. We have had access to and built out a analysis of 1,400 new age companies and analyze their IPO readiness over the next few years. Between a combination of the fast-paced growth in the market cap of the existing listed companies, these 50 companies, a few mega cap listings which we anticipate, and lastly, a good, healthy set of these 1,400 companies hitting the markets, we are quite sure of the base case playing out. And if that happens, then by 2030, we are looking at new age commanding almost like 11.5% of the India's public market cap. In terms of sector itself, so far we've seen retail and leisure and some bit of fintech playing out from a new age POV. But going forward, we see a lot more diversification of these sectors. So we see sectors such as B2B, TMT, even consumer goods for that matter, playing out a bit more. And so you will have a wide bouquet of themes to play within New Age over the next few years.
Sounds good over there. Mr. Agarwal, let's talk about the holding pattern that we're seeing in terms of interest from institutions. There's a very interesting line in your report saying India is now buying India. With domestic institutions now driving IPO demand, how do you see the mix between DIIs and foreign investors evolving when it comes to the primary market over the next few years?
Yes, so essentially the theme of FII selling in the secondary market, and that too for 3 out of the last 4 years, that's something that has been well talked about. But if you look at their participation in the primary markets or the IPOs itself, it's been growing. But what stands out is really the growth of the domestic institutional investors out there. We note in our report their share has gone up by about 5 to 10 percentage points in terms of the overall stack. A good chunk of that also has to do with how Indians as a whole have come together and started participating in the equity markets through sustainable means of SIP inflows. So we do feel this provides a structural stability to the Indian market, wherein in times of, let's say, global uncertainties or FII monies, let's say, thinning down, DIIs are able to at least pull in the weight. So there is comfort in that trend. How this plays out in the future, we do see both of them to be playing a very important role continued ahead as well, as India keeps an important position in the global markets for even FIIs.
Mr. Agarwal, I really wish we could extend this conversation. There are such interesting insights in the report, but maybe for some other day, due to paucity of time, we'll have to end this conversation here. But thank you so much for your time and wonderful to be speaking to you today.
Likewise, thank you.
Thank you so much.